So in evaluating the stock market in general, I think it's important to remember first principles, our core principles. The market is attempting to price individual stocks, taking into consideration the fundamentals of those companies, the future prospects of those companies, and all of that in light of the macro economy. First principles would say that it is no different than if you wanted to buy all or part of a local bicycle shop. I know, always about the bicycle shops, right? Anyway, but that's what I would want to know if I was buying a local business. It's no difference when I'm buying the stock in a national company. So Fed moves, wars, inflation expectations, government attempts to manage the economy, national disasters, and the hundreds of technical analysts with varying methods of guessing. You put all that aside, it's the economy, stupid. Not you, not that I'm calling you stupid. Hey, this is Randy Kirk. If you like, this is a combination today. You see, I've based this entire channel on what I just said. I base it on the fact that you've got folks out there that all they talk about is Tesla news, and they only think that the fundamentals matter when it comes to Tesla stock. You got other people out there, all they talk about is the technicals, and it's like, oh man, if we hit this number, then it's off to the races, and if we don't hit this. And then we have other people that are looking at the broader economy, and they haven't spent any real time studying the basics, the guts of what's going on, the foundational principles and the things that Elon Musk is working on over at Tesla. Well, I have spent the last 3 years and the last 9 months virtually full-time, if you want to count 40 hours a week as full-time, basically full-time, bringing in all three of those things together. Nobody else that I know of is doing this in a balanced way. If you know somebody else, I'm not knocking anybody else. I'm just saying all three matter. All right. So hit like if you think that's the right way to do things, or even if you think it's a one-way, a really good way to do things. Hit subscribe and notify, because tomorrow you're going to be notified all day long. Okay, in the morning we will have it won't even be the pregame show. It will be my regular programming at 10 minutes past 7 Pacific time, where I will tell you what I think is going to happen to the stock market tomorrow. I'm going to give you a little bit of a preview of that just in a few minutes, and then right after the earnings report comes out, I need a few minutes to read, take it in, but somewhere probably around 1:30 California time, I will produce my thinking about what was specifically in the earnings report and in the conversation about what they see going forward, and I'll put that out. It'll be a short one, probably a 10-minute or something, just enough to get that done. Right after the earnings call, you'll want to be notified again, because as soon as that earnings call is done, Larry Goldberg and I are going to get on a video together. We will probably spend 15 minutes to half an hour talking about what we heard. And as soon as that's done, I'll put that up. So somewhere around 4:15, maybe California time, that video will come up as well. All right. So you're going to want to be notified of all three of those. So hit subscribe and hit notify to make sure that you get all of that. And then all day long today, I've been posting on Patreon as I see news breaking. And by the way, I'd like to thank these longtime Patreon supporters. We got Jeremy. We've got Connecting the Dots. We got Randy D. We got Ben VDM. He's got a very long last name. We got Dan S. We have Bill W. And we've got Scott Nemec. I hope I pronounced that right. Anyway, hopefully they're enjoying those breaking news stories that I'm putting up every day with my commentary. They're not just breaking news. I add my commentary to each one of those as they go up. All right. The reason I correctly surmised over the weekend, and then again this morning, the way that I did and got it right on the nose, this morning I said the down market, the market was down, Tesla was down this morning. I said, I believe it'll be back up by the close of day. Well, because if the economy is strong, companies will earn money. They'll make more money than they did before, and on balance, the market will go up. All right. Sometimes others, let's talk about sometimes in a minute. So like Tesla, if you follow Tesla, and you do, and you've seen what it goes through, it might have times where it's undervalued by a lot, like when it was $100 a share a year ago. And it's going to have times when it's overvalued, like it was 2 years ago when it was at 410. But the overall trend will be to reward more value with higher prices for stocks. More value, you get higher prices for the stock. To be clear, the market might pay too much attention for 2 hours, like it did this morning, or for 2 days, like you've seen it happen before. It might take 2 months for the market to finally figure out that it was off too far this way or too far that way. And then some kind of worries like interest rates or inflation or whatever, and the market will be down when it shouldn't be down. It'll be up when it shouldn't be up. Well, that's what happened this morning. But this market is in a bull mode. That's what I've been talking about for months now. It's in the second leg of the bull now. I've been talking about that for a few weeks. So it's going to be inclined to pay more attention to multiple evidences of good economic times ahead than it is to the momentary problems that are asserting themselves, unless the narrative changes again. So today we had this negative news. Well, it was actually positive news about the economy that the market knee-jerk goes down, and then the market goes, wait a minute, the economy's great, and I don't think there's inflation, and I don't think the interest rates are going up. Anyway, all of the economic news was not rosy today, or the market might have been up even higher. It ended up really flat at the end of the day. NASDAQ was down a little bit, Dow was up a little bit, S&P was almost exactly zero. But the housing news that was negative today is probably already baked in. I don't think this was a surprise at all, except maybe in the amount, but not in the direction. Home builder sentiment dropped for the third straight month. Here is the conundrum. High interest rates make it hard for builders to build. Just as it doesn't matter. It could be lumber being too high. It could be not enough labor. All kinds of things get in the way. But when you're paying super high interest rates, that's just a cost, and you've got to figure that cost into the total proposition of building these homes. And if interest rates are high, and if it's a little harder to move those homes, you're going to be paying that interest rate longer, which just adds to the cost. So there is uncertainty due to potential for even higher interest rate hikes in the future. And so guess what? People stop building. So the Fed is doubly responsible for the low production of new homes, which are needed to provide adequate supply in order to bring down housing prices. So it's a conundrum. It's a catch-22. And the Fed has talked about it, but it's like the biggest thing that they say is still hindering them in terms of the high residential prices on homes, and yet they're doing two things that are causing it by raising rates. You can't make this stuff up. Well, on the good news front, Bank of America CEO Brian Moynihan had this to say on CNBC after they handily beat earnings this morning. This is a quote. They are seeing real-time spending growth by consumers down in half from earlier this year. This is not a quote. This is me doing a paraphrase. I'm sorry. They're seeing real-time spending growth by consumers down in more than half, actually, from earlier this year. There was a 10% increase in their numbers in terms of what consumers were doing to spend money. That has dropped all the way down to a 4% increase right through today. Now, retail sales data that came out today is a rearview mirror. It's looking back at September, and we're halfway through October. The Bank of America is saying, no, we're looking at right this minute. And they're saying it's been off. It's been down to around 4% in September in their numbers. And now it's showing that it's staying around that 4% increase as they go halfway into October as well. They expect the spending to level off like this. They say people listen to this. It'll sound really familiar. They say people have jobs and they have multiples in their account, cash in their account compared to pre-pandemic levels. And they're talking specifically about kind of the middle-class folks, not the wealthy. The wealthy are carefully disseminating their finances where they think it's going to make them the most money. But the middle-class folks, they have multiples of money in their accounts today compared to where it was pre-pandemic. This continues to support everything I've been saying. Slow growth, good employment, no inflation, productivity improvements, bond yields dropping. So speaking of bond yields dropping, this is not investment advice. I'm sorry, it's going to sound like investment advice. Some people are going to make a lot of money when the bonds start going up, when the yields start dropping, because the underlying bonds go up when the yields go down. And the yields are going to come down, and they're going to come down hard because they're way out over their skis. They're at 2+% in real interest, and that is historically nonsense. It's not going to stay up there. I understand all the arguments, and I agree with some of the arguments about the fact that the federal government is putting out all these treasury notes, and they need to get them sold, and that's a lot of supply and not as much demand. Sorry. At a certain point, the psychology of the investor, and there's tons of money, the psychology of the investor is, oh my gosh, I want some of that. All right. I want some of that 5 1/4. I want some of that 4 3/4. I want some of that 4 1/2. Or as it starts to go down, I want to grab some before it gets down even further. And I want to grab some before the bonds start going crazy up. And not everybody's a bond player, but there's plenty of folks out there. That's what they do. So I would look for that opportunity out there. Do not make these decisions based on what I'm telling you. Take what I'm telling you as a hint of an idea to maybe go do some research and potentially make a decision after you've talked to other professionals or after you've done your own research. All right. Industrial production. See, this is the things that are causing the market to go up today because the economy is doing okay. Industrial production actually increased 0.3% in September. That's 3.6% on a yearly basis, and advanced at an annual rate of 2.5. That's looking at the overall year in the third quarter. Manufacturing output rose 0.4% in September. The index for mining moved up 0.4%, and the index for utilities, and there's one, decreased by 0.3%. At 103.6% of its 2017 average, total industrial production in September was 0.1% above its year earlier level. Capacity utilization moved up another 0.2 percentage points to 79.7, which is in the normal range. Anything around 80% is considered to be good. U.S. business inventories increased a bit more than expected, even as sales surged, suggesting inventory investment could provide a lift to economic growth in the third quarter. Business inventories rose 0.4% after edging up only 0.1% in July, according to the Commerce Department. Economists told by Reuters had expected it to be 0.3%. Inventories, a key component of gross domestic product, increased 1 full percent on a year-over-year basis in August. Okay, that's it for the economic news. Now let's talk a little bit about the BEV automobiles. I don't have much, but I have a couple things here. BMW, which includes Mini and Rolls-Royce, will adopt the NACS standard. We're getting really close to having everybody on the NACS standard. There's a few holdouts, and you have to wonder why, because we have a rule in marketing. This is a rule you probably might remember your mom or dad saying to you when you were a kid. Your reputation is fragile, and any negative thing you do will be repeated 10 times more frequently than anything positive you do. That works for your personal reputation. That works for your product reputation. The world right now is reputation. The reputation marketing is huge. It's part of what I do as a consultant, is help people when they get bad reviews on Yelp or bad reviews on Google Business Profile or bad reviews on their Facebook. I help people when they get into reputation problems. So this reputation thing is huge. Well, the U.S. competition for Tesla has been badly damaged by the poor performance of the Chargers. This reputation is being passed along from person to person, from friend to friend, friend to employee, employee to owner. Anybody that's thinking about buying a non-Tesla vehicle, if these people know about the horrible Chargers out there, they're talking about it. It's been in the news. The Secretary of Transportation, no, not Transportation, some federal secretary did a whole thing about it in the news and was kind of bashed because she didn't have a Tesla in her little game that she played, driving 3 vehicles around, finding that it was a real problem to get charged up. So it is very possible that the main reason we're seeing the failure of Ford and General Motors and Stellantis and Mercedes and everybody else to get traction here in the United States is because of these charging stations. I believe that to be true. Now in Europe, the other chargers that are out there besides Tesla are much better. Still not as good as Tesla, but much better than the ones in the US. So the impact there hasn't been as great. So think about that for a while. So tomorrow is earnings for Tesla. Okay, yesterday and today, I've hit the ball out of the park. I've been exactly and precisely on. I said Tesla will follow the NASDAQ. It ended up following the NASDAQ almost perfectly both days. I also said I thought the market would be up then this morning I said it would recover. It recovered back to neutral. All right. But how's it going to work tomorrow? Okay, it's really harder to figure what's going to happen tomorrow. I'll give my analysis tomorrow morning before the market, or right after the market opens, when we're seeing some of the trends begin and any overnight news. So first of all, there are folks like my buddy Larry Goldberg who see a historical trend where Tesla is down the day after the market, and that would usually be because there was a run up to earnings day because there's FOMO. People are like, I don't want to miss out if there's a beat. All right. Well, there hasn't been that run up. Will there be a run up tomorrow? Will there be a last minute run up tomorrow? It's possible. It doesn't seem like it. And then there's other people that are bailing out or shorting. That would be Larry Goldberg. Maybe, I don't know if he's doing it this time, but he did it last time. He reported on this channel. He made some money last time because he shorted on Wednesday and then made it back on Thursday. Made himself a nice killing on Thursday. So anyway, it could go either way tomorrow, or maybe it just ends up kind of flat for the day. I'm not sure that it'll follow the NASDAQ tomorrow because I think it'll be more about these fears of missing out or fears of getting caught, owning a lot of stock that on, it going into earnings. I'm really not sure. We'll see what happens, but I'm still saying if we beat, and I think we will beat, and if we confirm guidance at 1.8 million for year end, we will have a nice big day on Thursday that will dramatically outpace whatever the NASDAQ is doing. So let's see. So the market, I think I've said everything I came to say. So have you bought one yet? Come on now. I didn't get any orders yesterday, not one. That's the first, I think it may be the first day ever that I haven't got, well, maybe there was one other day, but I had such good orders over the weekend. So I'm not complaining. I'm just saying, if you haven't bought yours yet, today would be a good day. So this is going to be since I had zero on Monday, I'm going to do a deal today. All right. I'm going to do 2 for 45. Okay. One for 25, 2 for 45. All right. So you just send $45 to Randy Kirk. I'm sorry, to paypal.me/Randy Kirk, all in lower letters. Now you can find this information in the description, so you don't have to write it down real fast or stop the tape. And then if you're outside the country, you do still need to add that $20 unless you buy 5. Now, if you buy 5, then you can still use that slight discount. Okay, so what would that be? It would be 5 for, let's say, 5 for $90 and no freight. That would be the foreign deal right now. So if you want to buy 5, if you're outside the country, if you want to buy 5 anyway, you can buy 5 for $90. Or if you're not outside the United States, you can buy 5 for $90 and I'll pay your freight. All right, those are some deals. Make sure to remind me of what my deals were. I'll have to go back and look at the video. Okay, and then you get a free one, of course, if you join Patreon. And if you're, what do you think? Do you think you would like getting those news all day long? You're looking at your email and it's like, oh, this is from Randy. Let me go see what the news is, because I'm only sending stuff that I think you would find interesting and useful. And then I am adding my commentary. So joining the $10 level, you get this for free. Please note camo or regular. And then, you'll get your news, and you will get this, and you'll end up helping to produce the show. So many benefits to become a Patreon member. Well, okay, that's all I got. See you in the morning. It's been great talking to you.